The Tax Foundation has just released their annual index of the most competitive countries in the world for tax. I'm going to share with you their findings, I'm going to share with you my interpretation, and I'm going to tell you how this affects you. Hi, I'm Andrew Henderson. This is Nomad Capitalist, where we help 7- and 8-figure entrepreneurs and investors legally go where you're treated best. More at nomadcapitalist.com. This is the report from the Tax Foundation. They put it out every year for 8 years in a row now. They call it the International Tax Competitiveness Index. And what they basically do is they go through the OECD countries. If you're not familiar with the OECD, it is basically a lobbying group for high tax countries to go to other countries and try and push them into being high tax countries because, you know, the world doesn't want to be competitive, and certainly governments that are in power one day don't want anyone else taking their people, their talent, their dollars, and so they go to the OECD, and there's a bunch of bureaucrats who, interestingly enough, many of whom don't pay taxes. So they don't pay taxes, but they want you to pay a lot of taxes. So this is a report of the couple dozen countries that are in that index, and so you're not going to see Vanuatu in this index. You're not going to see St. Kitts and Nevis. You're not going to see some of the places that are truly tax competitive. And so what I say is, these indices are interesting as a guidepost, somewhat similar to the Heritage Foundation's Economic Freedom Index, which I've been reading for 25 years. They do somewhat apply to, big companies. And, as a self-made entrepreneur who started numerous businesses since, 19 years old, who's been knocking on doors, selling stuff since I was 8 years old, what I like, and what I think a lot of entrepreneurs such as myself like, is we like simplification, which is addressed in this index, and we like low rates. Not all the countries, because these are OECD countries, have low rates. So I think that this is for people who want to stay in the Western world or in the more developed countries, but they want more tax competitiveness. This is interesting. For people who want a guidepost of which direction their country is moving, if you're in the West, this is interesting. And it's also interesting to kind of gauge what countries that businesses and big businesses and people who go to the Tax Foundation think are competitive. And really kind of, even with the backdrop of a possible global minimum tax, which I think won't affect our viewers for some time, I still look at why would you want to go to an OECD country? Why would you want to move your business to, number 3 ranked New Zealand? What is the benefit of moving your business to a country with 4 or 5 million people when you can run an international business, when you can move it to a country with 4 or 5 million people where the tax rate is practically zero? And you could source talent there. You could move it to a country like the UAE, where you can bring anybody in, unlike New Zealand, where you've got to source talent from that small pool of New Zealand and I guess Australia. So anyway, let's go through the findings of the report. It's an interesting guidepost. Many of you have been sending this to me. The 5 countries that saw the largest improvement in rank over the time period. So starting from 2014, this is a kind of a cumulative. This is not year to year. This is from year 1 to year 8. Number 1, Israel, went from number 28, now ranks number 14th. Not exactly low taxes over there in Israel, but we have talked about how certainly Israel does have a high tax sector, and in terms of kind of being forward-thinking, they do meet some of those metrics for progressive tech cities. Number 2, imagine this, the United States, which ranked 31st in 2014, currently ranks 21st. I imagine the Trump tax cuts have something to do with that, the Trump tax cuts that Democrats now want to undo. Interesting aside, that one of the senators, I suppose, who was instrumental in slowing down some of the tax hikes, Kyrsten Sinema, I was producing a morning show way back in the early 2000s in Phoenix, Arizona. It was my side hustle when I was building up my broadcasting business, my sales business. And at first I worked early in the morning and then went home. And then eventually I just said, listen, I'm coming in at night, working the night shift, just because I wanted to meet people. And Kyrsten Sinema was in. She was a brand new Arizona State legislature, I believe, in the Arizona House, talking, and I think I have this verbatim, I'm not entirely sure, but basically saying to Charles Goyette, the host, what's so bad about communism? Communism is great. And apparently has softened since then, and perhaps is the reason the United States will not change as much. But that said, if you're a small entrepreneur, the United States has not necessarily lowered your taxes, especially if you are an expat. Hungary, number 3, went from 21st to 13th. They were one of the ones pushing back on tax increases. Number 4, Chile, from 33rd to 27th. Interesting article in Bloomberg Tax recently about how they have pretty much nowhere to go but to pare back some of the tax incentives there. Not necessarily on local businesses, but nevertheless. Number 5, Canada, from 25th to 20th. And then the worst performers, the Netherlands went from 7th down to 12th. Turkey from 12th to 17th. Imagine tax competitiveness that Turkey is beating the United States, that Turkey is beating a lot of places on this list. That's quite interesting. Poland went from 30th to 36th. Belgium from 15th to 23rd. Colombia, 17th to 31st. Now, people will say, well, Andrew, you spend time in Colombia. Here's what the one thing I think people get wrong about these indices is just because you live in a place part-time does not mean that the same tax competitiveness that applies to businesses applies to you. You can spend some time in Colombia and not necessarily get wrapped up into the tax net. People may say, oh, Colombia has bad taxes, don't get their passport. You can have a Colombian passport, you can be a citizen, and you can live somewhere else. You're not paying the Colombian taxes. You pay the Colombian taxes if you live in Colombia for the majority of the year, if you run a business here, if you have employees, that kind of thing. So merely seeing that a country has gone down, and no doubt, we have 37 countries on this list, so 31st is not great. That perhaps means don't start a business in Colombia. And when we recently looked at a project of where do we want to expand into and put a significant presence, Colombia was a contender. It did not make the final cut, perhaps for some of these reasons. And so the list for this year, 2021, number 1, Estonia. Indeed, among the OECD countries, perhaps competitive. Lots of good tax incentives, especially for startups that are reinvesting capital. Number 2, Latvia, which followed to a certain degree in Estonia's footprints. But I think those countries are a bit ballyhooed. I think Estonia has been ballyhooed. Now, this doesn't mean it's a bad place at all. It just means that the ratio, almost like Gary Vee talks about day trading attention. He's like, I'm all for all attention, but I want the attention that's cheap attention. Once it becomes expensive attention, I don't want it. I kind of think Estonia's attention has become a little bit expensive and it's been propped up. Not to legacy brand status, but Estonia has been ballyhooed, and I think now people are starting to realize, e-residence wasn't really what it was cracked up to be and all that. Latvia, again, good in following Estonia's tax model. Go and look at the banking system. A lot of people have had a lot of problems. Leave a comment if you want me to talk about that. I might do that someday. Number 3, New Zealand. I don't understand this unless I'm a big business. I don't understand why I want to be in a country like New Zealand. Now, they don't have certain taxes, but again, if we're talking for business, I don't entirely understand because you're based in a country where almost everything you do probably is exporting, whether it's services, whether it's product. I don't understand the purpose of being there. I can understand being in the United States and saying, all right, we've got this huge domestic market, and so who cares? And by the way, I know a lot of U.S. businesses that just don't even know how to take orders from people in other countries because they have this huge domestic market. Why go to New Zealand where you don't have that benefit? Unless the tax is like nothing, I don't understand that. Number 4, Switzerland. Number 5, Luxembourg. Number 6, Lithuania, which has also adopted some positive tax models. Czech Republic, number 6. Sweden, can you believe Sweden? Where I was in Sweden 6 years ago, and I was kind of busting on the guy at the train station. He's like, oh, I'm so sorry we're late. I thought you guys had high taxes to pay for this. He's like, oh, ever since we reduced from 59 to 55, everything's fallen apart. How is that number 8? Number 9, Australia. Good luck to you. Number 10, Norway. And the list goes on. So these are the countries that have joined the high tax lobbying group. Again, you don't have the countries that I believe are truly competitive, but these are the kinds of lists that you have the big businesses looking at, especially because if you see the first prong of the global minimum tax, the companies that have that, 9-figure revenue are going to be more relegated to these kinds of economies. And so the article from the Tax Foundation talks about how Israel simplified its taxes. Well, that's great, but you know what? You can't get more simple than not filing a return. You have seen some countries like Barbados and Labuan in Malaysia get away from some of the very simplification. So that has been definitely a movement in some of the basically zero tax countries where there were like special offshore regimes. You have places like Hong Kong that I suppose thanks to its backing by China, still have that, but certainly some of the very low tax countries have been getting away from simplification to a certain extent, i.e. Labuan getting rid of its simple flat tax and going to the simple very low rate. The U.S. adopted a broad tax reform package in 2017, full expensing for machinery. So basically they're talking about tax deductions in the U.S. You can get better tax deductions. But if your tax rate is 0 or 3% or 1% in Barbados or whatever else, you're not really thinking that much about deductions. And this is what I tell people. You know what's really competitive? Not just kind of like, licking around competitive, but like what's really competitive is not having to make decisions based on a tax deduction, not having to count on a politician to change expensing, for investments in machinery. And so, again, I understand that not everyone's running a business in the cloud. There are big businesses that want to be in these markets. But for you, the Nomad Capitalist viewer, I really think the best simplification is just going where you're not thinking, hey, when are they going to let me write off these printers? Hungary brought in changes that reduced its corporate tax rate to 9%, the lowest in the OECD. However, it has the highest VAT in the OECD. And they have a bunch of other taxes and things like estates, real estate transfers, bank assets, etc. Hungary has been good in terms of pushing back on rising taxes in Europe and globally. But it seems eventually they're going to, at least on some companies, raise that rate. So that will change eventually, albeit perhaps not for certain small or local businesses. Chile, we talked about that. So perhaps, I've been saying for some time, I think Chile perhaps going slowly in the wrong direction since they've reached such a high level. Canada followed the U.S. by adopting some of the same short-lived assets, no wealth, estate, or inheritance taxes. In my world, no wealth, estate, or inheritance taxes is like par for the course. That's not anything to write home about. And then they talk about how Netherlands is, increasing regulations. Turkey is raising taxes on corporations. Poland is, going the wrong direction. Colombia has raised the VAT and corporate income tax. Now again, let's separate the fact that you can have a business somewhere and you can live somewhere else. Now, it's not always that simple. Certainly if you're living in countries like this, it's going to be even more difficult where there's going to be management and control issues and CFCs and establishment, all kinds of different things you need to worry about if you're going to be living in one of these countries and running your business somewhere else. So obviously where you live, if you own a business, where your employees are, where your production is, all these factors come into play. But you can spend part of your year living in Colombia and not run a business in Colombia. And you can also choose to not buy into one of these 37 countries that have signed up to go out and bully the rest of the countries to make your taxes higher. I still believe there are going to be plenty of opportunities to pay low taxes. And when the bar is 9% is the lowest, plenty of places to pay 9%. Hungary, if you want to be in the European Union or you need to be for some reason, certainly not a bad choice in some regards. But there's a lot more considerations than just corporate headline tax rate for some businesses. But this is a start. You see some countries going up, some countries going down. But again, if you were not from the United States, would the fact that the corporate tax rate went down to 21% bring you there? Number one, it's very hard to get in. The U.S., there was a big article in Forbes that the U.S. is pushing away entrepreneurs. That's been happening for a long time, but now it's reaching ahead. Would you come to the U.S. and start a business to pay 21% when a lot of the stuff that you could be doing, you could be selling into the United States, and you could be paying a much lower rate? Certainly, even if the eventual rate down the road becomes 15%, if you're running a big enough business, would you go to the U.S. and deal with all the hassles, all the filing, all the complexity, and pay an extra 6%? When that 6%, they want to raise it, it's going to be raised eventually. The 15, perhaps not so much. I wouldn't go there if I'm making $10 million or $20 million a year. It wouldn't be worth the extra money to me. And so that's where I think these reports a little bit get away from what you should be looking at. People see these, they're in the newspaper, they're in the magazines, but if you want to truly go where you're treated best, you want to go beyond just this sliver of countries that is in vogue, that are in the Western bubble. You want to go look at the places that truly treat you best. I don't think any of those, for many people at least, are on this list. Don't stop now. We've got well over 1,000 more videos here on YouTube for you to watch and learn how to go where you're treated best. And if you want to work with Nomad Capitalist personally, go to nomadcapitalist.com/apply. Learn about our unique, tried and true process. garnered over years of experience, and learn how you can become our client.